we're going to be discussing the process of getting a mortgage from start to finish. If you're a first-time buyer, then this video should help you understand what to look out for and expect on your house buying journey. Hello, welcome back to our channel and podcast. My name's Gemma, and here at WS we talk about all things relating to money, mortgages and positive money mindset. So if that interests you, then make sure to subscribe to our channel and hit the thumbs up. It really helps with our YouTube algorithm and means that you won't miss out on any of our videos. On today's episode of Let's Talk Money and Mortgages, we have Iftikhar joining us again. Iftikhar is a trained accountant and mortgage advisor who has been in the industry for over 10 years. He is also one of the founding directors here at WIS. Welcome back, Ifti. How are you doing today?
Hi, Gemma. Very well, thank you. How are you doing on this sunny day?
It might be sunny where you are, but it's definitely not sunny for me.
Oh, is it not?
No. Oh, but anyway, today we're going to be talking about the buying journey. So just for anyone who is looking to purchase their first house and just kind of wants to know what to expect, we thought that it'd be a good chance to speak to a mortgage broker to find out what kinds of things that you'll need to provide. So if we're starting at the very beginning, Ifti, when you have your first chat with a prospective buyer, can you just talk us through the kind of things that you would go over?
Okay, cool. So the main thing which we try to understand is to understand the prospective buyer's circumstances. That's quite important because before even suggesting that the person needs to get a mortgage, we need to understand whether the person can afford the mortgage and whether the mortgage is the right thing for the person. So once we can understand the person's circumstances, meaning we look at the person's income, the kind of expenses they have, the commitments they have, that's when we go into the detail. So that first meeting is quite important because we try to understand the customer very well. So if we understand the customer very well, it's very easy for us to provide solutions to the customer. So that's why that first meeting is quite important. So once we understand, then we can start talking about various options and things like that later. It's a good session that we have at the beginning. So after that, we provide customers with things like guides, right? Because especially with the first-time buyers, so they don't know a lot of things, right? So, we explain to them what a survey is because a lot of people don't know that there's something called a survey that you need to do. Some people do know that there's a bank survey, but that's kind of it really. But if you're buying a slightly older property, it's always a good idea to do a survey. So we go through things like that. And we also talk about solicitors, right? Because that's a big part of your buying process because they have to have a solicitor ready at the time that they're trying to buy the property. So where help is needed, we will help the customers as well. So mainly we try to understand what is required and what kind of products will be best fits for the clients. So that's what we try to understand at the first meeting with the client.
Yeah, I feel like the first meeting is the one where you ask lots of questions.
That's right.
Like who's the mortgage for? How long a term are you looking for? About their job and, all that kind of good stuff, right?
That's right, yeah.
Okay, so we've had this initial conversation. And then maybe we can just talk a little bit more about what our next step is as a mortgage advisor. So what kind of things we do and behind the scenes before we go back to the customer.
So what we do is, like I said, once we understand the circumstances, it's easy for us. So what we try to do is we try to understand, okay, what products might best suit this customer. So for example, if somebody's on a budget, we might look at products which are a little long term. Instead of a 25-year mortgage, we might consider a 30 or a 35-year mortgage. So we would do things like that so that we can sort of tailor the product to the requirements. And we will also try to understand their circumstances and come up with solutions like the solicitors, because a lot of people don't even know a solicitor who can help them with the process. So we try to find solicitors for our clients. Then we talk to potential lenders because everybody thinks they are the same as the other person, but unfortunately in the mortgage world, it doesn't work like that. Everybody is different to another person. So there might be a few quirky bits in your circumstances which some lenders might not like. So for example, somebody's on a probation. So some lenders don't like it and some lenders do. Or things like somebody has been out of work for a while and they've just come back to work. Or the sort of more common thing these days is somebody's been on furlough and they've just got back to work. So how would a lender look at that? So we kind of go and speak to the lenders about this to see that this client is the perfect fit, right? So before we even produce options for the clients, we look at these things in the background so that when it's time for you to sort of look at the mortgage, you're kind of ready and you kind of know which lenders to go to. So that kind of thing we do in the background.
Yeah, we try and find the right fit before we go and speak back to the customer,
That's right,
to make sure that it's going to work out for them. So, okay, we've got the deal. So now we go back to the customer. We talk them through the kinds of things that we found. And then what happens in that conversation and afterwards?
Okay, so if we find the deal, now we understood the customer circumstances and we think based on the customer's actual requirement, we find the product. So once we've done that, then we sit down with the customer and there's something called a key financial illustration. We call it a KFI. We go through that with the customer. Now, the KFI is very, very similar to a mortgage offer, but a KFI is issued before application stage usually. So whatever we think is the best fit for the customer, we present the illustration document to the customer. And we go through that document almost line by line, because that's kind of going to be your contract at the end. So they need to know certain things on the offer. Like, the most popular thing is what's the interest rate you're going to pay, and what is the product fee you're going to pay. And is there any other cost involved, like a valuation fee or any other legal cost involved? Those are generally spelled out on your KFI, the document. So we go through that line by line. And there will be special conditions on the mortgage saying if it's a 2-year deal, usually you can't break that deal without paying a penalty until the end of the second year. So things like that, the customers sometimes don't know, because most of them are, obviously we are talking about first time buyers here, and they don't know about these. So we go through that line by line so that the customer does understand what they are going to be signing at the end. Those are the things that we go through with the customer before applying for the mortgage.
Yeah, because sometimes it's not always straightforward, is it? Sometimes one deal might look on paper to be a little bit cheaper, but then they have higher product fees and associated costs. So on paper, actually, it might look like one deal is better, but then in reality, when you work it out, it's different. So I think that's always something to bear in mind too, isn't it?
Yeah, it is, definitely. Because a lot of people say, okay, my friend got, say, 2% interest, I need the same deal, right? But sometimes 2% may not be cheaper than 2.1%. Because the 2.1% product may not have a valuation fee, it may have a lesser product fee, and he might have less associated costs with it, right? So you can't always look at the interest rate and say, oh, this is the best deal, right? That's probably the best interest rate, but it's probably not the best deal or cheapest deal overall. So we as brokers, we look at best overall deals. So for example, if you went to a bank, they'll say, okay, this is our best deal. But what we do is we compare that against everything. Because we compare banks versus banks, and at the same time what we also do is we compare product versus product, because sometimes there might be a product which has 999 product fee, but there might be another product which with 1499 product fee but with a lesser interest, right? So that may work out cheaper. So you can't really look at the interest. So that's kind of what we will present to the customer, saying, look, this is the best deal. But sometimes people come to us and say, look, I want a mortgage but I don't want to pay a product fee. Yes, sometimes it's the best thing, but sometimes it's not. Especially if your mortgage is big. The bigger the mortgage, it's sometimes cheaper to pay a product fee because then the interest rate is lower. Whereas if you don't pay a product fee, generally your interest rate is higher. And for smaller mortgages, it works out okay, but for large mortgages, it doesn't, right? So that's the kind of work we do in the back end and present to the customer and making sure that they understand that as well.
Yeah. So, okay. For the purpose of this video, let's just say the customer is like super happy, they want to go ahead with the deal, we've chosen the most suitable one for them.
Yeah.
What happens next? What do we do next?
So that's when all the exciting starts, right? So we go back to the customer and say, okay, so you're happy now. And let's say the customer decided to go with X bank. So the X bank will tell you these are the kind of documents we want to prove your income, to check your expenses, to look at your commitments. So we will let the customer know that these are the documents we require from the bank. So what we will do on our end is we will check these documents before it goes to the bank. Because obviously it's good for us to check, because if there's a problem, we can always say, look, there's a problem, you better not apply because it's probably going to get rejected, right? Whereas sometimes if you go direct, you have no choice because they see something in the document, your application will be rejected, right? So most of the time we know whether application will go through or not going through the document. So we will do all those checks before we make that submission to the bank, right? Because once it's submitted and if it gets rejected, the bank has already run a credit search on you, and therefore it could affect if you have to go to another lender. So to avoid that, we do all those checks up front before it goes to the bank. And if we feel that there's something wrong, we will not apply because we don't want applications to get rejected. Or if it's something that you can sort out easily. So for example, common problem we have to sort out is the proof of deposit, right? So Sometimes people don't have all the money that's required as a deposit. A lot of people get money from their families to put down as a deposit, right? So the mom and dad generally comes to help out. So in circumstances like that, we'll make sure that we have sufficient backup so that if the bank double checks, it's always there. If that's not there, we will not make an application because we just want to make sure that nothing fails. So that's quite important. So that's the important thing that brokers do.
So I think that's the main difference, isn't it, between a mortgage broker and a bank? Because everyone kind of says, what's the difference? Well, I think the difference is that, like you said, if you go directly to a bank, there's not that intermediary who can warn you, oh, listen, something's flagged up.
Yeah.
Actually, this might be declined. Let's sort it out before that happens.
Yeah.
Because at least then, often we do sort out problems. And
Yes,
then
that's right.
everything ends up going through, doesn't it?
Yes, that's right. So that's one of the big differences. And also a lot of people like us and a lot of other brokers as well, we are whole of market, which means we don't only look at a bank, but we look at all banks who work through brokers, right? So that gives us more options to present to the customer. Because if you say, I'm a customer of X bank, I can just go into X bank. True, but X bank will only present to you what is available with them. They will not talk about the competitors. But whereas we can, because we have the access to all the providers. And also the other thing is with people like us, we know what the banks are looking for. A perfect example is your bonus, right? So each bank looks at bonus in a different way. So some banks, about 30% of the bonus they take into account as income. But some banks will go right to the top, right? So they'll take 100%. Some will take in between. So we can work out things like that. But if you go direct to the bank thinking, oh, you know what, I earned 25,000 last year and my bonus was 5,000, my income is 30. Yes, it is 30 for you, but from a bank's point of view, 5,000 is not guaranteed and they might only take 30% of that. So you might fall short, right? So the banks won't tell you upfront because you have to go and apply and then they'll tell you. Whereas if you go to a broker, the broker knows what lenders will accept 100% bonus or 75% bonus or whatever it is. So they know in advance. So that's a key difference that you have with the broker. And because, like I said, there might be applicants, their circumstance a little quirky sort of thing, right? So if that's the case, brokers can look at lenders who accommodate those, right? We are heavily into contractors. Contractors at the moment is very funny because some of them are inside IR35, some of them are working through umbrella companies, some work through their own company but inside IR35. So each bank looks at it in a very different way. So as brokers, we know which bank likes what. So that is always helpful. So it's no point going to a bank who doesn't like contractors who are working under umbrella structure. So those are the bigger advantages you have when you work with a broker.
Yeah, and then so if we're thinking about after we've had this conversation, we know we've got our checklist, we've got everything in order, then what's the next step?
Okay, so once we've done those checks, then we submit the application, right? So that goes into the bank. That means we are fairly confident as brokers that your application will go through. We can never guarantee 100% because the bank is the one who signs off your application. But to a good extent, we'll know whether the application is going to go through. But a lot of good brokers, they won't apply if they think it's going to fail because it's bad for the customer as well as the broker. So therefore, we avoid that sort of application.
Yeah.
So once the application is in, the first milestone is the valuation. You probably won't hear as well because valuers generally call the estate agent or the builder if it's a new property. So they'll contact them directly to do a valuation. Some banks do the valuation earlier than the others, right? Sometimes it depends on how busy the valuers are as well, right? So that's kind of your main milestone. That will tell you whether your house is worth what you're paying. So if you offered, say, 200,000 on a property, and the bank thinks the property is only 190, they will not be happy with a 200 property. So what they'll say is, yes, we will give you a mortgage, but we value the property at 190. So that's the first step to look forward to.
Just to go back on that point, because I think that's a really good point that you're making, just to make it clear to people. So say in that example that you gave, you offered 200, but the bank says actually it's only worth 190. What does that actually mean for the buyer? Does that only means that they will grant 190,000 mortgage, right?
Yeah, so for the buyer has a couple of options at this stage. This is the most common one. You go and renegotiate the price because if X bank is saying the property is only worth 190, why would you want to pay 10k more is the question, right? So you would very likely go and renegotiate the prices with the sellers because sometimes they can make mistakes with the valuation of the property, right? Because a human does it, mistakes do happen. So if that's the case, what happens is you renegotiate as much as possible. Sometimes the seller will accept it and sometimes the seller won't, right? So if the seller doesn't, that's when second option comes into play. So you try to come to a middle ground. So maybe try to negotiate something in between, right? So say 195. But the bank is only going to be basing it on 190. So if you come to some middle ground, that £5,000 difference, right, you will have to pocket out. Doesn't mean the bank won't give you the mortgage. It's just that you have to put £5,000 more. But if the seller says nothing doing, I'm going to stick to this price. And if you really, really love the property, you will have to pocket out £10,000, right? So you can do that as well. But most people try to negotiate because the logic is if the bank thinks it's 190, that's probably the right price. So therefore, a lot of people will try to negotiate it to 190. Because remember, that seller has to sell it to somebody else, right? So when they go to sell it to someone else, they're likely to have the same problem as well. So very likely the seller will come to some kind of arrangement with you. Best case from a buyer's point of view to stick to 190 because otherwise you have to pocket out money.
Cool, thanks Ifti for clearing that one up. Then after we've got the valuation booked in and everything's good to go, what's the next step?
Okay, so that's great. So then the underwriters will be looking at your application in the background whilst the valuation is taking place. So they will check all your documents. So you make the broker, people like us, all the documents the bank wants. Very likely they won't need any extra documents apart from the ones they initially asked for. But underwriters always want to be satisfied. They have a right to ask for something additional. For example, they might only ask for 3 payslips at the beginning, but if the underwriter feels that he wants to check some more, he might ask for 3 more months payslips. So they could do that, right? So they will do those checks in the background. And if they're happy, they will issue something called a mortgage offer, right? So if the valuation comes okay and underwriter is satisfied that you can afford the mortgage offer comes out. So that's a big thumbs up, right? So which means you're kind of good to go because the bank is happy to give you the money. At which point you can start planning your other stuff, right?
Cool. And when you're saying other stuff, let's just talk about some of those things for everybody.
Okay. So the other stuff could be something like a survey, right? Now, bank will, like I said, they'll do a survey, but they do a valuation more than a survey, right? Especially if it's an older property, you probably want to do a survey. Now, this is a question people ask me whether to do the survey at the beginning or at the end, right? What I normally tell people is most of the time valuations are free or they don't charge you as much as a survey. So I say wait. If the bank is satisfied with the valuation, then that's probably when you need to do a survey. Because otherwise, if the survey comes with a value and the bank says, actually, I'm not happy with granting the mortgage, you lost the money that you've given to the survey. So you probably want to look at it at that stage. And then what will happen is the mortgage offer will go out to your solicitor. And obviously you will get a mortgage offer out as well. It's a good idea to go through the mortgage offer with your mortgage broker. It is likely to be very similar to your key facts illustration which you looked at the beginning, right? But there could be differences. There might be certain conditions attached to it. So it's always good to go through it, and it's always good to go through it with your mortgage broker as well. So once you've done that, and if, let's say you've done your survey as well, your solicitors will be working on the application in parallel. They look at searches, the results that's come in. They look at the local council. They'll see whether there's flooding in the area. They will check all those things. So once they've done their searches, they will send you their findings. These are legal document, right? So go through the findings to see that whether there's anything that you need to be concerned about, right? So if you're not sure, do check with someone like a broker. Brokers might not be able to answer the questions 100% because these are legal things. So you may have to go back to solicitors and clarify certain things that come out of your findings as well. So once you're happy with those findings, I think then you're sort of good to go, right? So then the next stage will be sort of the exchange stage, right? So if all the finding looks okay, you're sort of almost ready for an exchange then, right? That's when the solicitor will start talking to the seller's solicitor to fix a date to complete. And they set an exchange date as well, right? So usually between the exchange and completion, there isn't much of a gap. There are exceptions like a new build or sometimes you have long dates, but usually they don't keep a big gap between exchange and completion.
Right, well that's it really, isn't it? That's the process. Do you have any last thoughts or anything you wanted to add to our first time buyers who might be watching this?
Yeah, I think you need a lot of planning if you're a first time buyer. I think it's always good to have a mentor when it comes to this. And quite often mortgage brokers are your mentor. They can guide you throughout the process, starting from checking your credit files, checking your documents, just seeing whether the mortgage is right for you, and helping with understanding your financial circumstances. And if there's something that you have to correct as you go, they can guide you. I have clients who've been with me as first time buyers. They bought houses about 6-9 maybe even a year after they first met me, but they do maintain that relationship till the point that they make that mortgage offer. So, mortgage advisors can guide you in a lot of things, right? So therefore, always try to sort of work with someone like that, because you need a mentor, right? Obviously, there might be people in your family who can help you. There might be friends who's gone through the process and who's experienced who can help you. But if not, if you don't have that support, always, I think it's a good idea to rely on someone like mortgage broker, because they can handhold you throughout the process, right? And sometimes you do need that, because obviously first time buyers are people who have not done this before, right? So you're doing it for the first time.
Yeah.
So, yeah.
Well, thanks again, Ivji, for some more great advice.
Thank
I
you.
just wanted to put a reminder out there that these points may or may not be applicable to everybody, so do check with an advisor if they are suitable for you. And if you don't have an advisor, I will leave our WS contact details below, as we are always happy to help. And I don't usually mention this, but I will say it this time round that we do offer free advice, and we are a free broker. So if you are a first-time buyer, you probably need that little bit extra help, please get in contact with us. We'd be more than happy to speak to you. A little reminder that as the mortgage is secured against your home or property, it may be repossessed if you do not keep up with the mortgage repayments. Thank you for joining us again today. It's a pleasure to have you back. We will be joining you back next week with another episode of Let's Talk Money and Mortgages. Have a great day, stay safe, and we'll see you again soon.
Thank you.